Just recently, members of the U.S. House of Representatives voted to pass President Joe Biden's $1 trillion bipartisan infrastructure bill that contains a provision set to shake the crypto industry in the U.S. and essentially the entire world. Financial regulators continue to call on Congress not to risk regulating this emerging and controversial asset class. Joe Biden's recent yet shocking warning message to XRP holders goes to show how much XRP holders need to brace up. You can find out more about this in our previous videos and, of course, our future videos as well. In the meantime, if you hold XRP, watch this now. Thanks for watching Make Money Online. If you haven't already, consider hitting that subscribe button and turning on post notifications. We'll be right back after this.
GSX is an unprecedented financial asset that combines the best elements of a traditional investment with the backing of a stablecoin and the use cases of many of the largest decentralized currencies like XRP.
Following the slight but recent uptrend that hit the market a few days back, where we had XRP retesting the dollar mark briefly, even though the currency has continued to dip to lower ranges, the $1 mark remains the critical resistance level. XRP has since been tending towards the 80-cent support zone, which shows how much hold the bulls have on the market. And until the bulls reclaim control of the market, XRP's price action will still be trading under the dollar margin. The current bias for XRP is bearish. However, XRP is likely to draw much attention from the market considering the launch of the next phase of the Sologenic airdrop set to kickstart in a few weeks. Even as the indicators continue to point towards the bearish end, the bulls seem to be having a long stretch before they can eventually take hold of the market and take the price higher above the dollar mark, as the ongoing trend that has the price of XRP resisting the dollar margin doesn't give any confidence that XRP can rally anytime soon. Moving on to the regulatory scuffle between members of the crypto community, financial regulators, and the U.S. lawmakers towards the regulation of cryptocurrencies, more struggles lie ahead as these lawmakers battle with the right regulatory reforms needed to regulate the emerging asset class with regards to taxation. The latest crypto reformation does not sit well among crypto enthusiasts within the country. The bill is set to change how cryptocurrency brokers, such as Coinbase, will be required to record and report all customer transactions to the U.S. Internal Revenue Service. Set to kickstart next year, this new bill, heavily opposed by experts in the digital currency industry, who continue to argue that such a supervisory approach wouldn't work with this asset class, given its underlying decentralized infrastructure that allows for complete anonymity. Events such as this emanate from the long-standing campaign by the world's governments to subdue the cryptosphere since the advent of the asset class in 2009. But they'd always failed woefully, as they'd always sought ways to wholly wield control over the crypto market, just as they have with the traditional system. But they're now going after the exchanges through transaction scrutiny and tax police. As such, the crypto community continues to enjoy the support of a bipartisan group of 21 senators spearheaded by Senator Joe Manchin, the Democrat senator representing West Virginia. The group of 21 senators, 10 Democrats and 11 Republicans, especially Senator Nancy Pelosi, insisted that the House will not be taking up the bipartisan bill only when the Senate passes the bipartisan bill and a reconciliation bill. Although the Senate seems to have previously reached an agreement on the infrastructure proposal's cost, which was valued at around $1 trillion, with $579 billion allotted to newer spending, this group of lawmakers now calls for a revisit of the bill's funding, even though the initial proposal didn't include such details as funding. Just as noted in a statement from this disagreeing group of lawmakers, argued that the bipartisan framework can promote historic investment opportunities in the U.S. core infrastructural needs without the need to increase tax further. Hence, they'd have to work with their Republican and Democratic colleagues to develop a legislation based on this framework to address America's critical infrastructure challenges. Unfortunately, however, they didn't release any details about the breakdown of the bill or how it'll be funded. All the same time, the senators have agreed to a framework that they would be dishing out to the White House, just as noted in a statement by the group that still hopes to amend Joe Biden's newly released infrastructure bill, just in the same manner through which stock and bond brokers currently do via Tax Form 1099-B, where customers' details such as their names, addresses, and phone numbers are revealed to these regulatory agencies, in addition to the gross proceeds from sales and any capital gains or losses. That's the same trend about sweeping through the entire crypto space. The new bill will require businesses that receive payments in cryptocurrencies ranging to more than $10,000 to report the sender's identity to the government, a procedure that mirrors a similar anti-money laundering rule for cash transactions of that amount. Now, what does this mean for cryptocurrency traders? Well, potentially everything, since the IRS already treated virtual currencies as property. Taxes are incurred whenever these cryptocurrencies are sold or exchanged, just as with a stock or bond. Similarly, this translates into the event that an employee paid in cryptocurrency owes income tax on it. The IRS is currently engaged in a massive crackdown on those not reporting their crypto transactions. If the asset is sold for less than the original purchase price, it creates a capital loss to offset other gains, as is recently included in the Individual Tax Return Form 1040 with a query that prompts U.S. taxpayers to report any receipts, sales, or exchanges of virtual currencies. Following recent research conducted by the Joint Committee on Taxation, levying taxes on digital assets, especially cryptocurrencies, could raise an estimated $28 billion in revenue, which could be of great use funding the sweeping infrastructure bill that's been moving through Congress for some time now. But as these lawmakers and government agencies continue to justify their actions because these rules are meant to address such issues related to crypto transactions, not just taxation, crypto proponents in the US believe that the language used to describe the crypto broker is way too broad, as it includes a wider scope that involves an entity that provides service actualizing the transfer of digital assets. A service that essentially means crypto miners who provide the excessive computing power needed to validate these crypto transactions, and the platform's software developers might be required to report data that is not naturally accessible to them due to the modus operandi of the blockchain network itself. Famous crypto advocates such as Republican Senator Cynthia Lummis, representing the state of Wyoming, had aired her concerns about these excessive reporting requirements becoming a significant hindrance to crypto innovation in the country. Other financial stakeholders like former SEC Commissioner Hester Pierce look forward to a better standard to regulate this emerging asset class, as we slowly tend towards a completely digitized economy, which is rumored to be spearheaded by XRP, the impending standard for cross-border remittances and essentially the future of digital money. The XRP ledger, instead of having the majority of the ledger holders verify a transaction, just as seen with other crypto platforms, the Ripple network incorporates a validator software rather than the usual miners verification structure employed by many other crypto platforms like Bitcoin. Hence, it eradicates such worries as logging specific data to the IRS and additional tax collecting agencies in other jurisdictions. Other cryptocurrency platforms are designed to have their transaction ledgers and verification processes open to anyone who can solve complex equations quickly. The Ripple network is designed such that these government agencies can sign up on the Ripple validator system, which has a default list of 35 trusted validators, such that users on the network can choose which among these validators they'll like to verify their transactions through the ledger's unique nodes list. Since the XRP ledger also creates a sidechain for corporate organizations, we can see how XRP is set to take Bitcoin's place as the most significant digital asset. The introduction of the newly released policy agenda, which was disclosed during the Crypto Sprint Week shortly after Biden's bipartisan infrastructure bill, summarizes the plans set in place to regulate the kinds of activities legally expected of banks concerning trading between the old and the new financial system. These rules were set in place by such financial stakeholders in the country, including the Federal Reserve Board, the Comptroller of the Currency, and the Federal Deposit Insurance Corporation, and it drafts a framework for how these traditional financial institutions are expected to comply with current regulations. Thank you for watching today's video. If you enjoyed it, make sure you subscribe if you haven't already, and turn on bell notifications. We also have a free Discord group where we share daily signals, and now you can also support us on Patreon. We have a special offer for our first 100 members, only $9.99 for our VIP Discord channels, where we share much more in-depth analysis and even one-on-one sessions. And make sure you check out the GSX competition for your chance to win big. Links are below, and if you have any questions, drop us a comment. And we'll see you next time.